Hey guys, this is Vic from GraspingTheMarket and welcome to our market briefing. Well, today we started the week and we traded right in the middle of last week's range. Well, not right in the middle, but we opened close to the low and made our way towards the middle, which is also the middle of the this balancing range that we've been stuck in for the last week and a half or 2 weeks. On the larger time frame, as we pointed out in yesterday's briefing, we've been one time framing higher for 3 weeks. On the monthly, we know that there's very little meaningful excess at the all-time highs. So those time frames point towards a continuation upwards. On the daily, we see the balancing, and we are accepting and holding and building a value up here, which is very close to the all-time highs, relatively close. So that also favors the upside in the near future. Now, when we look at the market profile, it is interesting to see. I pointed out this morning that failure to get acceptance below the 80-75 area, which is kind of the low of the current balancing range, increases the odds of a rally. The reason I say that is because let me add the evening sessions. And the reason I like to say that is because if you look closely, this lower part of the range we're currently at have been tested a tremendous amount of times. You see here, rejection, very sharp rejection. This was the FOMC low. Then on Friday, bounced it, and then the revisit was not able to reach the earlier low. Yesterday overnight, bounced from it. Late in the session, towards the open, bounced from it again. We opened inside, tested again, and went up. So what I'm saying is that every time we go up, we go down and we go back up, there's an inventory kind of rebalance attempt. But if they sell again and again and again and again, the chances are that the inventory is getting too short. Now, what happens is that if they are not getting paid, all the people selling close to the range are not getting paid. At some point, the inventory is just too short and they need to bail, and you have a short covering or a squeeze. And I think we had a little bit of that today. We had a squeeze because at the open, we opened right at the border of Friday's range, broke lower, were not able to even test the overnight low, and push back inside with strength. Now, in that push, which was about to close the overnight double distribution, the seller stepped in, and the A period left a very nice excess at the top, and the B period started to head down again. And this was a fantastic clue because at this point, you have too wide inside. You had excess at the top, and with all these attempts, now you're going back to the low, and this time you could not even get outside Friday's range. Could not reach the A low, obviously could not reach the overnight low, and started going back inside. When the C period opens, immediately takes the B high, which technically starts a one-time framing up. At this point, I thought, well, the long trade is gone. Probably there's not a chance to stop, but the C period started to come down, and there was a fantastic opportunity, and it was an opportunity / data point because the C low was not able to reach the B low. So at this point, you have higher lows, and then the D period opens and immediately pushes up. So I think, in my opinion, the market got a little bit too short, and that's why you have this push. Because the reason I said that is after you had this push and build value up here, you had some liquidation towards the close, and you were not able to challenge the double distribution separation from Friday. So overall, the bearish sentiment that drove the market on Friday lower still remains. You basically accepted the lower distribution, but there was a clear inability to get out of the range. If that is correct and the market remains with an inventory imbalance, you should see a continuation of the move up, especially now that you have this liquidation acting as backing and filling. So that will be the focus for tomorrow. Focus for tomorrow will be on value development, and we need to keep in mind the separation of the two distributions on Friday, which is still in place, and this afternoon low at 92.75. Acceptance within the M range or above favors the upside and increases the odds that we will see a push up on probably a rotation back to the other side of the range, which is at 30, 24, 27 area, which is getting really close to the all-time highs. On the other hand, if you get acceptance below 92.75, you will negate this move and you're going back against the low. And remember, the more you test a reference, the weaker it gets. Obviously, you get the possibility, like I think happened this morning, of the market getting too short, and that creates an inventory imbalance and a squeeze. But if at the end of the day you back and fill, and try, you may see the area eventually breaking. If we look at the daily, it is well balanced. You have a clear rotation here, then buyers step in, then you have the rejection from the FOMC, touch the top, touch the bottom. So it's going back and forth. It's a healthy rotation. Looking inside, I see a little bit of an inventory imbalance on these last two sessions. But again, nothing stops the sellers from pushing the gas and try to get the low. The focus for this week as well is you have a lot of appearances from Fed officials, and after the FOMC data released last week, where you see that the majority sees no further cuts, it will be interesting to see how they frame their rhetoric towards the market and for clues of any change from what we saw last week. So pay attention on that. Larger time frame points up. In the immediate time frame, let's monitor continuation from this Monday late range. If we see acceptance above this double distribution separation, that would be 3,007.75. If you get acceptance above that, that brings into play the Friday's high and potentially the all-time highs or the top of the range.